Welcome to the Sazmining Podcast. At Sazmining, we are bringing you into conversations with today's industry leaders in blockchain and cryptocurrency. Our goal with this podcast is to improve the understanding and adoption of blockchain and cryptocurrency by giving you an insider's look at what's being built and informed predictions on what the future holds. Today's guest is an alum of Huis University, where he received his bachelor's in finance and business management. Previously, he was a senior quantitative trader for Transmarket Group in Chicago, one of the world's most credible proprietary trading firms. He then went on to start his own boutique trading firm, where he was again a senior quantitative trader and managing partner. Today, he is co-founder of K&H Crypto LLC, an institutional trading and investment firm focused on leveraging years of capital markets investment experience to generate both excess returns in trading as well as successful venture investments. He's also actively a partner and the director of sales and institutional trading at Blockfills, a global financial services, technology, and trading firm in the digital asset space. Blockfills provides liquidity, technology, and clearing of digital assets for professional and institutional clients. So with all that said, I'd like to welcome you to the podcast, Neil, Ben, Huis.
Thank you, guys. Appreciate it very much. William, pleasure to be with you here.
Yeah, definitely. So to kick things off, can you just talk a little bit about what got you into cryptocurrency?
Yeah, absolutely. So as far back as 2012, one of my developers on the algorithmic trading side was kind of pounding his fist on the table, yelling about Bitcoin, and said he had been trading it since 2011. And I said, look, we've got far too many things to be worrying about on the liquid trading side. I can't be trading something that's so illiquid and I know nothing about. And so for years, he pestered me and said, you're crazy. You need to be looking at this stuff. And actually in 2015, traditional futures markets were getting pretty saturated and a little bit boring. And so we were kind of looking for volatile assets to kind of dive into. And so we started taking a look. And by 2016, we started, the end of 2016, we started divesting out of the traditional futures and options space and traditional asset classes. And we decided to start getting into crypto. So at the time, I was living abroad in Europe, trading a lot on the European exchanges, and I was asked to come back so that we could kind of talk about what was next in digital assets, and that's how we formed Blockfills.
Got it. So when you were making that transition, was that something that you had to go and learn a lot about in terms of the mining side, or were you starting more so with just trading of Bitcoin?
Yeah, so I mean, we really started with a fundamental understanding of where Bitcoin came from. So we kind of knew how mining worked, and it kind of looked a lot like a commodity to us. Just like someone's producing a crop, we're just some guys can be producing a Bitcoin on a computer, and so that's how we kind of looked at it from the early days. And so really, we've only focused on the trading side once we had the fundamentals down, and it wasn't until much later we got deep into the mining side.
Yeah, and this is one of the things that you guys have been doing that's been getting a lot of media attention recently is your involvement in cryptocurrency mining, and particularly in North America. So can you talk a little bit about how that's started? I think it's within just the past year or so, and what you guys have been focusing on.
Yeah, sure. So last year, about the middle of the year, April or May of last year, we started doing traditional collateralized lending with Bitcoin miners, where they would post their Bitcoin up as collateral to get dollar funding to expand their business, and they pay interest rates on that collateral, right? And so in September of last year, a couple of those clients came to us and said, "Hey, thanks, this lending is going great, but we're thinking ahead, in May of next year is the Bitcoin halving, and it's also going to be a new hardware cycle. We're hearing from Bitmain, MicroBT, Canon, et cetera, that we're going to be seeing new types of hardware out there that's computing, maybe at 6 to 10 times what the previous generation S9 machine was mining at. And so we're going to need to change how we manage our balance sheet to grow our business going forward after the halving. And so, is there anything that you could come up with that would be attractive to your capital partners as well as the mining sector to help us buy these new machines on the market? And use that on our balance sheet. So that's how we came up with basically a hash rate structured product. We basically fund the purchase of the equipment, and it's paid back through the production of the Bitcoin that's mined. So they basically mine Bitcoin, they send it back to us, and if we owe our capital partners dollars, we convert it from Bitcoin to dollars and pay them dollars. If they want it in Bitcoin, we pay it to them in Bitcoin. If they want a little bit of both, we can do that as well. So that's been like the hot take of the final part of the year in 2019, and now big in 2020 post-halving. And so right now we've seen an unprecedented amount of demand for this. The equipment market is a little bit finicky right now. There's just not a lot out there. And there's really only a couple machine types that everyone's most interested in. But we're navigating that with our partners, the hardware manufacturers and the mining firms. And so I think that in the very near future, the little bit of capitulation may occur in the hardware market once wet season is over, and we'll start to see things open up a little bit. And I think that that's going to be a huge business for us.
Yeah. And this is one thing that I really want to unpack with you. And there's a lot to go over there. So initially, you're talking about a certain type of financing structure that you guys take in approaching these financing of different miners. You mentioned how you'll provide the financing for the purchase of all the equipment, and then the BTC that's being mined is acting as collateral, as well as the actual hardware that's purchased, correct?
Yeah, that's correct. So through the entirety of the term of the financing, I'll call it, it's really a lease, right? We're purchasing the equipment on your behalf, and we're leasing it back to you until you pay it back with interest. And so through the entirety of the lease, we own the equipment. So that's a form of collateral for us, right? And then as you pay us principal and interest payments from your Bitcoin production on those machines, essentially we look at it like it's being paid back, right? But we also, from our terminology, because we also own the equipment, we're looking at it as a form of some sort of collateral substance. So yeah, in this case, the payment principal and interest, as well as the machines, are backing the financing that's at hand.
Yeah, and I think that this, just going further, is something that's really important for the crypto mining industry to continue to mature and grow over time. And your firm is one of the few firms that's actually willing to go in and play around with the different types of structures to make something work. Because you look at mining as a business and the way that it works, you have, to a certain degree, predictable level of cash flow that's going to be generated by these equipment. And you have hard assets as well as the BTC that's being mined as collateral for the investment. So I think that a lot of times investors and larger investment firms are afraid to really get involved because they don't understand all the nuances of mining. So with that said, when you look at the landscape today with the firms financing these miners, what are you seeing in terms of options for crypto miners who are out there who are trying to scale? Maybe they have 5 megawatts running and they're trying to go and scale up and become a 50, 100 megawatt firm over the next few years.
Yeah, so I think number one, their struggle is real. They can't go to a bank and get traditional loans and financing. In a normal world, if your business was computers and you were a very profitable business and you wanted to go get a loan to grow your business in computers, in computer hardware, you'd be able to do that no problem. So it's shocking that we still have to have these conversations in this marketplace where guys can't go get funded from traditional venues at lower cost of capital. So what we really specialize in is sourcing that capital and explaining the detail on how we protect the portfolios and explaining why our team and our firm is in a good position to manage that risk, because our careers are all in risk management and in trading and managing the ebbs and flows of markets. So for us, we really worked together with our partners to get that right form of capital, both at scale and at cost, that understands the miners and says, look, we don't want to just write you a loan, because if we write you a loan and it's a crappy deal, you're going to turn around and you're going to default, and that looks bad for us, but it doesn't do anything for the business. It doesn't do anything for you, doesn't do anything for the sector. It just causes more scrutiny on the sector. So our focus is on delivering you the lowest cost interest rate that we possibly can, so that you can be successful and then we're successful. And so after we do that, we also, the majority of our loans on this side of our book has some form of hedging tactic to it as well in crypto derivatives. So we protect the portfolio in a number of different ways, so that the biggest risk to the miner is the price of BTC once they're running their machines, right? Some other risks are delivery risk on the equipment. If Bitmain is delayed in delivery, like we're seeing on a lot of cases now, but once that equipment is turned on, unless there's a failure rate, your hope is that once you've got past all the other hurdles and your machines are running and they're humming nice and you're making money, your biggest risk is that the Bitcoin price goes down. And so we can't foresee all those other risks, and we try to mitigate them the best we can through negotiations. But once these things are running, we need to focus on your price risk. And so we'll hedge the portfolio and the miner's position with derivatives, so that in the event that Bitcoin drops below their cost of production, they're hopefully protected to navigate at least 6 months of those types of storms that we've seen before. And on the upside, we'll limit their upside just slightly by saying, listen, guys, you don't have a free call to the upside to let this thing go to the moon like you want it to. But if you're willing to sell, the next 2 months of your production at 15,000 and we're at 11 or 11.5, we can do that for you. And most everybody says, yeah. I mean, if the worst case scenario is in the next 2 months, I've got to sell my Bitcoin at 15,000, I'm actually okay with that. And so it doesn't really put them in a bad position long term to cap their upside. And so it's been working really well. And we think that whole strategy together is what we pitch to our capital partners, and that is what we pitch to our clients. And everybody seems to be kind of working harmoniously currently.
Yeah. And it really seems like this approach, especially from a miner's point of view, your company's found quote unquote product market fit, in the sense that there's capital that can really benefit from investing in mining. There are miners who need access to that capital. You gave the example of how in any other type of business, you can more easily grow and scale at reasonable interest rates to grow and expand your mining operations. When you guys go about trying to price the interest rates on the capital, how do you go about doing that for the miners that are trying to borrow to expand their business?
Yeah, that's a great question, actually. So, by doing these types of deals, it's a lot like you're giving equity to a company, right? Because you're basically buying an asset that's going to be on their balance sheet in the future, right? And so we look at like what you can go get dollars at today if you're a reputable firm. So number one, we look at their balance sheet, and we're not funding guys that just don't have any money, don't have any assets. They're just saying, oh yeah, I used to mine some S9s, but now those S9s are turned off and I don't have any money and I don't have any assets. But can you give me a $5 million line of credit? No, I can't do that. It's just outside the realm of possibilities. I'm trying to scale guys that are scalable. And so we first look at the balance sheet. And if we say, boy, in a regular world, these guys would easily be able to get 2.5, 5 million, whatever, to get in a loan. We're going to give them that. And we're going to say, okay, in a real world, what would the rate be? Putting crypto completely aside. And we think we're really in the right place on rates. And then if you look at, what people today are able to put up, dollars or, stable coins or, in the form of dollars into, deposit schemes in the lending world in crypto, we're just a touch above those rates. And so I think that, this is what we're seeing in the market. We think it's really competitive. The feedback that we're getting is we're the best rates in the market. Sure, there's other guys that can come in and play at those rates if they choose to, But some of those guys are also saying, well, look, I'm going to give you a rate. It's going to be 25 to 50% higher than Blockfills. And you can take it and I'll fund you today. And that's worth it for me. If you don't take it, I'm going to go buy that equipment and I'm going to do the mining myself because the returns are right. And so I think that that's the difference for us. Is what we're trying to do is we're trying to continually be an agency business that supports the people in this sector rather than compete with them. We're not looking to go compete with you and mine against you. We're looking at it like the worst case scenario is if you default, we become a Bitcoin miner. And so we're okay with that, but it's not like our business is supporting trading, capital markets, investment banking in this sector.
And is your main focus right now, I know that you're not just in mining. Mining is what we've been talking about, and you have a great product for mining. But outside of mining, what are the other areas of the business that you guys are still focused on?
Yeah, so I mean, our core business that is liquid and heavily operating all day, every day is a trading business. We're not a retail exchange like a Kraken or a Coinbase where anybody can just onboard and buy and sell crypto and shit coins and whatever else they want to do. We only do institutional and professional business. So think of us a lot like a brokerage, a futures clearing merchant, and a very, very, very small, digital asset bank, right now. Everyone that comes to us does active, large scale trading. We've got hedge funds, banks, asset managers, institutional trading firms, market makers, all those types, OTC traders, lenders that trade with us on a regular basis.
Yeah. And can you actually define OTC and how it differs between the traditional financial world and how it acts right now today in crypto?
Yeah, so OTC trading, as it started in crypto, was just a place for professionals or institutions to go to a vetted counterparty that they knew and said, okay, you're an actual business. You're not just some crypto exchange that just popped up on the map that we know nothing about. We can look you up. You're a vetted business, and you're going to give us a transparent bidder offer on the quantity that we want to buy or sell in Bitcoin, right? And that's how it kind of all started. And that was an on-ramp for high net worth professionals, institutions, right? But that's a really clunky process in a digital world. And so we were really the first firm to take OTC trading electronic. And we basically paired up our institutional market makers who were providing OTC quotes, right? And we just asked them to do it in electronic fashion. So then we aggregate all of those quotes from institutional market makers in a live streaming market that you can execute on the buy and sell side for all the top digital assets against all of the major G8 fiat currencies, as well as other cryptos and stablecoins. So really our product is come and work with a business, which is a bunch of ex-traders, a bunch of people that know markets, rather than a guy who just likes Bitcoin and decided to start a crypto exchange with a exchange out of the box, that they purchased and white labeled. So our technology is an order of magnitude greater than that of most exchanges. We're co-located at all major Equinix data center facilities in New York, London, and Tokyo. So it's a great way to access the market for liquidity, transparency, and proper technology in a market where, a couple of years ago, anytime it got volatile, every single on-ramp to crypto just shut down. And so our real job is to focus on institutions and professionals that need better access, better price liquidity, and full service operations. We're not an exchange that just says, look, sign up and we'll never talk to you. You've got to figure it out on your own. No, we have 24-hour support for our traders, and you can call us, chat with us, whatever it may be, to get access to all the cryptos on both deposits, withdrawals, and executions.
Got it. Right now, it seems like you guys are in all areas of the space. We touched on mining. We just talked about how you guys have your own OTC, and you're not focused on retail type investors. You're focused on those larger institutional investors who want to have that level of sophistication that comes from, for example, the traditional financial world. When you look at all these other exchanges like for example, Coinbase, Kraken, other exchanges that do provide those types of trading services to retail investors. How do you think that the market's going to evolve in terms of all these different exchanges growing over time, some being retail and institutional focused, some others being solely institutional focused like Blockfills? How do you think that ends up playing out in the future, 10, 20 years down the line, when we're looking at the services that are offered from OTC as well as trading for non-institutional retail investors?
Yeah, I think that's a really great question. I think a lot of people, including myself, expected consolidation of exchanges much sooner than we've seen. But I think the reason why there hasn't been consolidation is because just until recently, no one has really commented on the regulatory side in the US, and now we're going to allow banks to do crypto custody, right? So I think that when it's all said and done, banks do not want to operate a lot of like crypto executions. So I think that crypto exchanges can still be there. But what I think that we'll see in the future is that, that savvy bank, that more digital bank, that investment bank, that asset manager, that family office, that private wealth office, those are the guys that are going to come into the space, in my opinion, and ask for the technology services that we have. We're going to be able to put something on their desk that allows them to book trades and executions for clients that call in that want Bitcoin. They're going to be able to custody crypto in let's say a Fireblocks wallet through, by signing up with Fireblocks and it being linked entirely to our system. They're going to be able to, work seamlessly with us rather than move things on and off exchanges. We're going to be able to do all of that with, the tier one banks in crypto. And as banking evolves, maybe much bigger entities come into the space. But I think that's what you're going to see in the future is that those savvier players, those high net worth on-ramps, the private wealth, the family office, et cetera, you're going to find those guys that need a solution. And that solution is not going to be a crypto exchange. So my hope is that, firms like us will be able to support those participants. The crypto exchanges like Coinbase that are trying to go more institutional after, I think, having a little bit of a tough time with that client base for a couple of years, it's probably more about that they know something in the regulatory climate that's about to change. Hence, their announcement to go public before that crypto custody announcement happened. But I think that they're making plans for it. But most of these exchanges are not set up to handle institutional business properly. And so I think only a few handful of them will be able to service that. The rest, I think, is going to be focused on just simple on-ramps into crypto. But that exchange that has an on-ramp is not going to be any different to me than the same app that was created or the wallet company that was created that allows you to buy and sell crypto, through your wallet now. I think that's why you've seen so many of these wallets pop up that are allowing you to buy and sell crypto now. I think that seems to be much good. That seems like it might be much more prevalently successful than more exchanges in the future. So that's my take on that. But I don't think there will be too many exchanges that are going to be good at both retail and institutional. It'll be tough.
Wow, that's the most interesting answer I've received when asking that type of a question, because I have heard that people are thinking that there was going to be consolidation and that would be happening sooner. But it's interesting to hear that with all these other factors that are playing out from a regulatory perspective, how that really does influence how fast all these other dominoes begin to fall. From your perspective on the regulatory approach that these different governments are going to take over time, each country has been taking a different approach. You look at how quickly we're able to come out with options and futures in the US versus other countries around the world. How do you think that it's going to continue to progress in the US over the next few years? I mean, you mentioned the recent announcement of how the OCC now is promoting, now is headed by someone who used to be at Coinbase, actually, and is a huge Bitcoin supporter and believes in the future of cryptocurrency and blockchain technology. How do you think that regulation is going to end up progressing these next few years in the United States and abroad?
Yeah, so I think every year that goes by in crypto is like 5 years in a traditional space. So, every year that crypto doesn't die, someone leaves a major firm to go, work for another major firm that says, hey, we're thinking about digital. Can you come over here and tell us how we get there? I think that will continue. And right now, just remember that the only reason there's options in futures in the United States is because CME Group and Bakkt said we'll do it. And really that stuff didn't, and Bakkt really hasn't taken off. But, for example, the only reason CME has, well, I don't want to say the only reason, CME has only recently really taken off. It took quite some time. They basically pushed CBOE out of the space early on, right? And now, with Bakkt still hasn't really caught on. And so the only reason there's stuff like that in the US is because CME was willing to do it. But they remember they still don't touch physical. They only touch the derivative, right? So to me, what I would be really excited about if we could ever get there would be someone with a serious balance sheet that does crypto, physical, and derivatives all in one place. Because the next best thing that you've got to CME in the options world is Deribit, which is way, way, way offshore. And the fact of the matter is that big US institutions with very robust balance sheets are simply never going to want to trade in a domicile of that nature unless they're a really extremely open-minded firm. And that's not going to be the overwhelming majority of them. So, us being domiciled in between two entities, between the Caymans and the UK under FCA registration, I think that puts us in an interesting position for, building derivatives platforms next, rather than just OTC. And so that's something that we're almost done with, is introducing liquid derivatives in both futures and options. And so under our registration in the UK, that puts us, nowhere near comparable to CME or Bakkt in terms of balance sheet, but in terms of regulation and scrutiny, the FCA has been much more vocal than the CFTC and SEC, and they're the considerable watchdog outside of the US.
Yeah, and one of the things that I wanted to bring back, kind of going back to the mining conversation that we were talking about earlier, when I've been speaking with some of these large mining companies executives, they mention how they've been evaluating potentially getting involved with hedging strategies using these derivative financial products, but they haven't necessarily taken that next step forward to do it. And these are companies that are publicly traded companies, large mining companies, that if you think of any mining company who's going to get involved with utilizing these derivatives, it would be these companies. So I was really fascinated earlier when you had mentioned that you guys, as part of your strategy, are utilizing some of these financial products to hedge the risk of something happening with the price of Bitcoin that could negatively impact a miner's profitability. So diving into how you guys are using these financial derivatives or financial products, can you talk about how you guys approach that problem and how you hedge your risk properly?
Yeah, so I think there's really two strategies that I look at that are most prevalent right now for the miners. One is a pre-planned strategy using options, where they're basically managing the risk to the downside while also managing their production expectancy in terms of profit, right? And so that strategy is getting more and more common because it really encompasses how someone with a very predefined set of cash flows would manage their risk, right? And then there's guys in the mining space that, part of their mandate is to hold on to some crypto, and they don't really deal in dollars, right? If that's how they do things, then some of them are savvy enough to pick up the phone when the market spikes and say, I don't want to sell Bitcoin right now, but what I want to do is I want to sell calls. or I want to put on that options hedge now as the market spikes and have a volatility play. Or some of them will say, and this is a little bit different hedge, but some of them might say, look, the funding rates have exploded in perpetual futures, and because Bitcoin has rallied $2,000, again, I don't want to sell my Bitcoin, but I'm okay with selling it if I had to. I'd rather say I think Bitcoin's going to come down from here, so I'm going to be on the sell side of the perpetual future. I'm going to get paid funding while I hold that, and I think Bitcoin's going to go lower. Worst case scenario is when the time comes, if this doesn't go my direction, I sell my Bitcoin and I pay for my perpetual and I move on, right? So those are a little bit savvier strategies depending on who wants to move really fast and who's got crypto on their balance sheet. But that takes a little bit of execution savvy. That takes a lot of readiness. The more standard structure I expect to see in the future is guys holding crypto, using call options to generate yield, or putting a strategy on an options to generate dollar borrowing at low cost, or guys protecting their production upside and downside.
Yeah, and it's really interesting to hear you run through all those potential strategies. Like the most glaring, obvious one that would make sense potentially for a miner is if you know that your operation is going to generate a certain amount of Bitcoin, and you're trying to protect your downside, you understand your cost basis to produce that Bitcoin, then you could buy, for example, a put option where you're locking in a certain amount of profit to sell that Bitcoin at a certain price in the future. But the thing is that many miners, just inherently of being in the mining space, you're bullish on the future of Bitcoin. So if you're protecting your downside risk, but you're naturally bullish on the future of Bitcoin, then if price goes up, you completely lost the upside, or you lost your maximum upside because you spent money to buy that put option. But on the other hand, if price goes down, you were able to lock in that price earlier on, and you protected yourself from a catastrophic drop in the price of Bitcoin. So with all of that said, I know that there's been some talk about how expensive some of these financial products have been for crypto as compared to some other traditional asset classes. Is this something that you think is going to prevent miners from getting involved with? Or do you think that the cost of these particular types of financial products is going to come down over time?
Yeah, so one particular strategy with puts and calls that we work on is considerably low cost, typically zero cost. And so we actually market them as zero cost options. And the only way they can remain zero cost is if you pick the right strikes. But generally, if you want to give, to earn a little bit more, you might pay a little bit more from the zero cost option, right? But if you pick strikes and you're pretty fine with it, we can usually navigate this as a very low cost or zero cost option. Now, I think the guys that are willing to take all the risk, unless they're a cowboy, they're usually guys that have their own sites, have a really, really low cost of power, have some of the best margins in the space. And that's a very small amount of participants. Today, the guys that I think that we're going to continue to see in the space scaling, or the guys that we're scaling, are guys that are like, look, I've got a pretty good, strong balance sheet. I want to geographically diversify my hash power. So I don't want to be just in one geography. I want to come into North America. In some places, I get good energy rates. In other places, it's just okay. And so I'm not interested in paying to reduce some of my margin. I'm just interested in protecting my existing margin. And so if I can do that, my shareholders are happy, everybody's happy, and we stay in business and we continue to grow. Those guys that pay for the put are guys that are really, really in a good financial position because they've taken a lot of risk elsewhere, or they own their operation. They've been in the game really early, and so they're on. I don't want to call it free money because they paid for it, but they're on some serious gains to be able to allow them to take that. but I don't see a lot of those guys. Maybe that business is elsewhere, or maybe they're just doing it themselves, but I don't see a lot of guys coming in and just saying, hey, give me the put. I want all the upside. I see a lot of the guys that are like, look, I've got cash flows. They're predictable. Help me manage my cash flows.
Yeah. And going off of that, what do you think is the biggest challenge today for crypto mining companies as they begin to scale, and also protecting their downside as they scale?
So the biggest hurdles to guys going at scale that don't have all their own money, right, is sourcing capital and deciding whether financing or equity capital is the better route, one being more expensive than the other, right? And so in some decisions, they go with the equity because it's the right move at the time. And some decisions, they might go with the financing because it's better at the time, right? But having access to capital when it counts is critical for guys. I've heard that over and over and over again, say, how can we strike a deal with you where we don't just do this one deal, but you basically agree that we're going to have a $10 million line that we can draw on at any time? You know, we can't really do that, right? But what we've said is we think we have really good pipelines of capital, and we think that we can deploy capital in near real time. And, you know, we think that that's good enough, because if you look at the hardware market, I know that everybody's goal is to draw in capital when they need it so they can buy equipment when no one else can buy it. But at the end of the day, like I've worked with the hardware manufacturers really closely the last few months, and it's all a game. It's all a game. You know, one minute they don't have equipment, all of a sudden the next minute they do. And one day it's this rate, now it's another rate. It's all just a game of like popping up equipment on the market based on supply and demand. And I think that the one thing that many people would love to see is someone other than China or Taiwan producing chips, because that will make the game different. Right now, with all the issues that are going on over there internally with these firms, the consistency in getting available equipment is tough. And I think that if there was consistency in capital and consistency in hardware, that would change the game, and it would allow it to scale much, much faster. But right now, other than that, it's a game of opportunity. And so it's still challenging, and it's still open for opportunity for players.
That's fascinating. Yeah, I think that really is. You have the capital and then the actual access to the hardware. There are two major hurdles. I mean, you look at some of the pricing on the equipment, and it's not like a lot of other industries where it's based upon the cost of how much it costs to produce. There's a certain level of competition and margins are fairly thin. They're basically, it seems like, working off of the ROI time on some of this equipment, and then they're just pricing it and upcharging at certain times. And then at those times where the equipment is at a good, fair, reasonable price, it's when a lot of the miners might not have the capital to be able to renew and get into that next cycle of hardware.
I'll tell you what, I think, and I could be wrong about this, and so I'm kind of sticking my neck out there a little bit, but after playing around in that sandbox for a little bit now, I'm starting to get to know that, like, in other cycles throughout 4 years, there were times where brokers were able to sell equipment at big premiums because of the ebbs and the flows in the market, and especially in North America, because, you know, if you didn't have the relationship with someone in China, you know, to get the equipment directly, you know, your best chance was to make a relationship in North America. Go shake a guy's hand, you know, make sure that he can help you, and that's how you get your business done. But today, the transparency in relationships is growing, and so what I think is really going to change in the space going forward is brokers that have been really well positioned to get equipment from hardware manufacturers as notable brokers in the past, they're going to get their allocation, you know, in a quarter or in a month. And when they can't sell it, you're going to find that the Bitmains and the MicroBTs of the world have it allocated over here to broker ABC. And when broker ABC can't sell it for a 25% premium, but I'm talking to MicroBT or Bitmain and they're telling me they don't have the equipment, they're going to go back to the broker and say, hey, broker, you know, I can't give you that equipment because you can't sell it at your premiums. I've got a guy over here with cash money in hand ready to go. So, yeah, we signed an agreement. How about I buy you out of that agreement for a little premium on what I gave you? You'll get paid. You didn't do any work. And I'm going to go sell, Neil over here, at a $10 premium to what my normal rates are. And he's going to pay it because he can get equipment delivered today. And so I think that's more of what you're going to see is the participants like ourselves that are doing the work. And there will be more of people like us that have cash in hand, ready to go, that are making their relationships direct. I think that some of those brokers will go by the wayside.
Wow. Yeah, that makes sense. And do you think that from a manufacturing point of view that more of that manufacturing of competitive equipment is going to begin happening in the US? Or do you think that China and some of these other countries are going to stay dominant in the ASIC manufacturing market?
Well, on the second part of that question, I'm not sure anybody can. Intel just announced that, a week or so ago that they're not going to be able to come out with a 7-nanometer chip that they thought they were in the next few months, that it's going to be the end of 2021 or maybe 2022, and they're not even sure if they're going to produce it. They might basically do licensing rights with that of Samsung or someone else because they just don't know if they can do it. They're just like, we're a chip maker and we're not sure that we can make that chip. We're not sure we're good enough. And so from that point of view, that's a tough question to answer. I think there are a lot of people exploring production in North America or just not in Asia through a number of different groups. But, I don't know what that will mean. Will that mean 25 to 30% premiums in cost of equipment? Okay, well then Bitcoin needs to go up 50%. If it doesn't go up 50%, I don't think anybody's going to take that risk. I just don't think it's worth it, in fact. So yeah, for the time being, I think that there's a lot of people exploring it, but I just don't know if it makes financial sense. Either one, until this thing really skyrockets, or number two, some other chip maker says, yeah, hey, I got it. I got the job done. Here's what I can produce.
Yeah. And in terms of predictions for how the mining industry is going to evolve, there's a clear intersection between mining and the energy sector. Miners need a lot of energy. How do you think those two industries are going to emerge over time in terms of the intersection between the two?
I think you're going to find less Bitcoin geeks that are mining crypto as a percentage of the total. And you're going to start finding a lot of energy guys that say, yeah, I got some money. Sure. I got some space. I'll put some servers on and I'll run some Bitcoin because otherwise it costs me money. I got to do something with this stuff. We're also, there's a lot of people talking about the Permian basis and how much there's an issue in the Permian basin to get rid of flare gas. And so there's a bunch of these unique offerings that people are trying to start to actually raise money and build infrastructure on for crypto that's going to solve an energy problem. So in my opinion, I just got off the phone earlier today with a good friend of mine in Texas. He's been a fantastic line of communication in that world for the last couple of years, and he's really savvy in crypto mining. And he's like, look, there's projects going on down here, some quietly, some not so quietly, but we're gonna start doing our own mining, using these opportunities, and these are all oil and gas guys. So yeah, I think there's going to be more traditional guys that have access to energy that are going to start saying, hey Neil, I heard about your podcast with Sazmining, and I got a bunch of energy over here. Would you guys be willing to do like a profit sharing deal where you finance the miners so we don't have to put up the money? We provide the facility and the low-cost energy, and we pay off the machines together, and we split some profits until the machines are paid off. I think you're going to see a ton more of those deals.
Yeah, and going back to your structured product, when you're looking at those types of deals, let's say an energy company comes up to you, what type of credit worthiness are you looking for, generally speaking, in being able to work with someone who wants to get involved in mining and has the energy production side down?
Yeah, so I'll kind of answer that in two parts. One, traditional credit oversight from crypto guys. We're not really financing anybody that has debt on their balance sheet with no cash or no crypto. For example, guys that have financed other equipment through profit shares or traditional financing measures, but don't have any additional crypto or cash. That's too much leverage for us. We're not interested. It's just not feasible. There's too many other deals that are much better than that for me to go spend millions of dollars on that type of deal, right? So that's number one. They've got to have some sort of substance and assets on their balance sheet. Could be that they own 17,000 mining rigs and they don't have a lot of cash right this instant because they just went and bought a bunch of other machines, but they own those machines. If they own those machines, I know that they're going to produce a ton of Bitcoin with those machines. And that's something that's important to me. They'll sell it or they'll own it. They'll have it on their balance sheet. Okay. So then I'm happy to give them some leverage on financing. All right. The other guys that own, serious assets, substations, energy facilities, property, whatever it may be. I think those are guys that, we want to see still some cash in their stack. We want to see, what their financial statements look like, to see their cash flows, to see if they're purging. If they're purging, we probably don't want to give them a loan. If they're a dying energy business, we don't want to give them a loan. We do not want to make crypto their lifeline. But if they're a steady as she goes energy company that's got cash flows, they've got a real set of assets as well as cash flow on their balance sheets. We'll definitely work out a deal with them. It's not about having $20 million in cash on your balance sheet. We're a firm that knows how to handle leverage. We're used to that in derivatives markets. So, it's just got to be a healthy balance, and we're willing to work with a lot of different guys in the space.
Yeah, that's great. Well, that was absolutely fascinating. On to topics that aren't necessarily specific to crypto. What is your favorite movie?
The Game with Michael Douglas.
When did that come out?
The 80s, man.
Okay, yeah. I was gonna say I hadn't heard of that.
Yeah, The Game. It's super twisted. It's a cool movie. If you haven't seen it, watch it.
Okay. Without any spoilers, what's the premise of the movie?
The premise of the movie is that he gets stuck in this game that all these things keep happening to him in life. And he's like, why are all these things happening? And he starts to really investigate all these people that keep popping up through these things that are happening in his life. And he starts to see these smoke and mirrors and all this stuff. But at the end, he really finds out he was in a game. And it wasn't like a digital game. It was like someone had hired this company to put him in a game in his real life. And that's how it goes. And so he has all these wicked things happening to him. He's like this ultra successful investment guy. And it's just these constant shakeups happening in his life, and he's investigating them. And it really is a gift to him as a birthday present.
Oh, that is awesome. Yeah, I got to watch that movie.
Yeah, it's pretty cool. I mean, if you can get it in high def, do that. Otherwise, you might be watching some fuzzy programming, but it's a great movie. It's a legend.
Yeah. Do you know if that's on Prime, Netflix, any of those?
It's probably on some sort of streaming service because it's old school. People have seen it 100 million times. So, it's not really worth anything on the open market. So yeah, you should be able to watch it somewhere.
Awesome. Yeah, I'll check it out. And everyone listening should definitely check it out. Sounds like a good movie.
Yeah.
Also, what has been your favorite place that you have traveled to?
Oh man, I'm one of those people that, loves different places for a different vibe. So in the Caribbean, my spot is Aruba. In Europe, I'm Dutch, so I love Amsterdam. The Netherlands is a fabulous country. But I'm a huge fan of Switzerland as well. And I recently got to go to Asia for the first time last year. Really enjoyed Singapore. It's totally interesting. But yeah, that's the best way I can answer it. I don't think I have a favorite place. So.
Yeah, you're hitting all the spots.
Sorry. Yeah.
Yeah, nice. Well, I guess getting specific on one, what was your favorite part about Amsterdam? If I'm going to Amsterdam, tomorrow, or not, maybe not tomorrow, but when travel and everything's back to normal, what would be like your go-to recommendation in Amsterdam?
Well, recommendation, give me a second to think about that. But the reason why I love it so much there is I'm really big on multicultural societies. And I think what the Netherlands is really prominent for is bringing people from around the world and accepting them. And so it's a really diverse culture there. Going back 10 years, the Dutch don't really have like a cuisine. If you go back 10 years before, like, how bustling the city is now, you could only get like Turkish food, Mediterranean food, like Argentinian food. Now they're known for their food scene from all around the world. So, just bringing in people from around the world, I think South Africa would be very much like that. And it's like my number one place I want to go that I haven't been because of that same reason. So, I hear good things similar that way. So, yeah, I think that's probably why I enjoy it the most is that. But they have a really great social culture. So I think, the biggest recommendation I can have is just like be out and about. Don't stick your head in a building all day or, whatever. Just be out. The people are super friendly, and being out in bars, cafes, restaurants, and enjoying people and listening to their stories is probably the best thing to do there.
Yeah. I mean, that's the amazing part about traveling. It's kind of weird when you think about it, because you're only in different places for maybe 3-4 days at a time if you're doing something like a Euro trip, trying to hit a lot of spots. But it really is one of those things that when you're there, you want to be out and about. You want to be seeing, doing every single thing possible. It's like you're not going to go to Paris and not go to the Eiffel Tower or go to any of these other countries and not do like the major landmark activity when you're in those countries.
Yeah, absolutely. I lived in Amsterdam and Hamburg, Germany, between both of those cities and a couple of other, smaller stops for about 2 years. And if you go to France, it's not the same. If you try to go to Austria, it's not the same. You try to go to even Belgium, it's not the same. When you're in Germany, the social scene is incredible. They're really accepting to other people. So they want to hear your stories and you want to hear theirs. The same is true in the Netherlands. So, I've yet to find a lot of countries that are really like that. Many other places are much more like commonly private. And so, that's what I think is so cool about those countries.
Yeah. Oh, Germany's great. I haven't been to Amsterdam, but I remember in Germany, I was in Munich, and I also had a chance to go to the BMW museum, and that was like right before, I think it was the i8 came out, and they had the featured car. I was so excited for it to come out, and then it was completely different from the showroom car that they were showing in the museum. But just going and walking around, taking the train in different areas is so different.
Yeah, no doubt about it. Germany's a fabulous country, and the great thing about them is they're so open-minded, but they have a lot of tradition. So you can go and explore their traditions, and it will take you forever to explore them all. But you still get that vibe of everybody wants to hear about what you're doing and why, and everybody wants to tell you about what they're doing. And so it's awesome. It's a great country, great people, and like I said, if you go through a lot of other places, it's not that other places aren't great too, but the people are different, and it's just harder to garnish those relationships and hear about all the things that you'd love to know about that you just couldn't possibly know unless someone locally told you.
Yeah. If you weren't doing what you're doing now with Blockfills and you were doing any other type of career, what do you think you'd be doing?
Boy, I was an athlete for a long time. I played some ball in Europe. I played semi-pro back in the U.S. a little bit.
Oh, wow.
The reason why I got into trading was because when I realized I probably couldn't go on much longer in athletics, it was the next most competitive thing I could do. But if I could go back in time and stay alive in that circuit, I think that'd be great. I just love starting businesses. I'm a little bit of a serial entrepreneur for many years now. So I've got some other things that I'm working on as well. And I like starting and growing things. And that was a big reason why I kind of came in as a partner here at Blockfills when they founded the company, and we've all worked very hard to get this business running and in the place that it is. So, that stuff, no matter how draining it is on the energy side, it's totally worth it. I just love doing it. So whether it's Blockfills or anything in crypto trading or not crypto trading, I just love building things. I think it's just a lot of fun.
Yeah, and I can definitely see it now that athlete type of mindset, you really need that type of, I guess, drive and competitiveness if you're going to go and start a business or build something from scratch, because it's very difficult, takes a lot of time, and there are many times where things aren't going to be going your way, and you just got to find a way to solve that problem and get past that hurdle.
Yeah, sure. And I think, I came from team sports, right? Rather than being a tennis player, which is a singular sport, right? Well, not always, but frequently. So I think that, having that background of working with teams, I think is super critical for growing things from the ground up too, because there's just absolutely no way you could do everything alone. It's impossible. Yeah. And, being able to work together with people to grow something with a goal or multiple goals in mind, and really taking those visions and staying on the right track together. That's part of the challenge of building something, and working with people on that is just an incredible journey.
Awesome. Well, this has been so much fun. Great talking with you. You know a lot about mining, man, which is really great to hear.
I'm not sure that's a good thing.
Yeah. Well, someone who's going and getting involved with finance in the mining, I'm glad that someone like you was actually involved in filling that gap within the industry. So this has been a lot of fun. Last thing is, are there particular social media sites or places online where everyone who's listening can connect with you?
Yeah, I mean, I push a lot of content on LinkedIn when I have it, so people can look me up on LinkedIn, on Twitter, at Viceroy_NVH, a very old Twitter handle. Don't judge. I'm Dutch, and I picked the Viceroy tulip because I'm a trader. So anyway, yeah, at Viceroy_NVH on Twitter, and on LinkedIn is where I pretty much push all my content. So.
All right. Awesome. Well, thanks again for coming on.
Thanks, William. I appreciate having me, and thanks so much, and we'll talk to you guys soon.
Thank you for listening to this episode of the Sazmining Podcast. Be sure to follow us on social media and YouTube for the latest updates and previews of upcoming episodes. Full episodes and transcripts can be found on sazmining.com every Thursday. If you want to hear us interview a particular guest on a future episode, please reach out to us at podcast@sazmining.com.